See, it's very important you have to be passionate. Okay, you should forget certain things when you're really into something. You know why? What I found? Where did I find my passion? How did I realize that this is my passion? See, a lot of things are there. Headache is, you don't ask me what is my headache. You want my list? I will share my list. I have this problem, this headache, this is happening, this is not working for me. I was like this in my company. I was earning 2.5 lakh salary. So many lists are there. Followed, no? But when I sit here, either to prepare or to teach, I just forget it and just focus here. I enjoy it. At least at this point of time, those whatever botherings are there, no, it is not coming into my head. Then I realized one thing. Okay, it's very important that we have to enjoy certain thing, and we have to spend more time doing that, so that all other irritating things, no, will not come and haunt our mind. This is my realization. Then what I used to do? Spend more and more time into what I am enjoying. Otherwise, what happen? No, if instead of this, if I start wondering what is going to happen, those thoughts are useless thoughts, which is just, it's going to haunt us, do nothing best. Okay, and I will remain the same what I was 2 or 3 years back. See, it took me around 6 years now. From 6 years I am doing same thing here, not getting very concrete results what I am expecting, but I can see changes happening within me because I am into something. Followed, no? And the moment I come out of this, again it haunts. So my point is very simple. We cannot avoid that, whatever comes and haunts us, no? But we can reduce the percentage. Rather than that getting filled 80% of our time in a day, 6 hours I sleep. So balance whatever, 16 hours, what is that, how many? 18 hours. Instead of that getting filled 16 hours of my mind, since I get involved more into this and I enjoy this, I keep it that only 2 to 3 hours. I also really wonder, while walking, I just wonder what next. What's happening? What should I do next? Should I take this? Should I do this? So many things will come, and I kept a time for that. That's my time when I'm walking. Walking is the best exercise also for your health as well as your mind, because a lot of thoughts will get opened up for me. That's why even though it rains, wherever it happens, I just walk at least half an hour a day, because that time I keep for all these haunting thoughts. And because that time I'm free, no, there's nobody. I'll talk to myself, I'll curse myself, I'll fight with myself, I'll motivate myself. Because see, who is there whom we should go and tell my story? Who is interested? Because the person who I go and tell, their person is also in their own problem, no? Who is interested in others' problem here? So I should tell my problem to myself. But when? Not whole day. Followed, no? So that's what I told, it's a test. Because when we sit for preparation, my only one question to you, do you enjoy it? No, if not, problem is what you know. Something else will come and sit in your mind which makes absolutely no help to you. What makes help to you, what brings that changes within you, is something what you do consciously by paying attention. So you are able to understand the truth, no? I'm telling one truth. And understand, the only and only thing you can control in your life is what? Thoughts. Nothing else you control. You think I am controlling this water bottle, I can open the water bottle, drink the water. No, Baba, you are controlling your thoughts, giving instructions to your hand to make it happen. And if you say that thought itself I am not going to control, then how can you expect something in life that results should come to? Because results are not within your control. Writing examination is not within your control. Nothing is in your control. That means it is a total random life, which is, I don't know, how do you perceive that randomness? If you, that's why, see, empowerment comes from feeling controlled. And that happens when you get control over your thoughts. This is what I realized eventually over a period of time. That's why my always again and again suggestion to everyone, find happiness in what you prepare, what you do. dancing. Find happiness in what you do there. Cooking. Find happiness in what you do. More and more you involve in that, more you happy, more and more you excel. And more, see, what is the purpose of life? Happiness, no? So be happy. You eat food, what for? Happiness. Be happy. So find that happiness in whatever you do. And understand the priority. At this point of time, yes, you can say, sir, I'm happy in dancing. Yeah, I understand. But do that. Understand what is your priority right now. So try to figure out an happiness here. And it's just a change in the perspective. The moment you start looking it from another angle, things looks differently. It's the same thing. If you think, oh, see, again, one more experience I will tell you. For me, if I start teaching once, first time, I understand that I'm not good at it. It takes 4 teachings for me to excel. Because by the 4th time, I start telling simple. That word doesn't come to you. It is not that I consciously tell the low, simple. You have heard me telling so many times simple. I'm not telling that. It comes to me automatically. Now, if it has to come to me, at least 4 times I should have done it. That means every single time when I repeat that, see, I'm like a singer here, repeating same song again and again, correct, no? For you, it may be the first time. You go, next batch comes, what I should repeat? Oh, take out question number 43, 80 limited. The same song, no, for me. But every time when I repeat, I see something new. That's why I invite questions from you, because I'm biased. I may not be able to see. You come and tell, sir, this is this way. It gives a new perspective to me, new learning to me. So when I'm asking, when somebody is repeatedly studying again, why you are not getting a new perspective second time, third time? Why you're not getting a new perspective? Probably you're not looking for the perspective. Because when, instead of looking at that perspective, something comes and sits in your mind and blocks you there. No, I'm not telling to anyone. I'm telling to myself. This is what I have observed in myself. This is what I want to shape myself. Followed, no? Because how, see, I don't know. I cannot tell to anyone because each person comes from different background. We cannot tell, pinpoint, this is like this is you do like this. But Baba, your backgrounds are totally different. Each person is not different. Each person is distinct. Agreed, no? We all come, see. Again, I would like to repeat, Albert Einstein has told, we cannot judge a fish from its ability to climb the tree. Fish is fish. Okay, doesn't matter. In our life, whatever, because of chance or choice. See, I came to CA just because of chance. I think I shared also. I came to CA because I took over the chit. I didn't take. My father took over the chit in front of the God. MBA, CA, MCom. CA came, I came here. If MCom was there, MBA was there, I would not have been teaching you right now. See, so that's what I did know. I took, see, somebody told me, but later part, when you are truly confused in your life, when you really don't know, because see, if you are sure that I have to do CA, I have to do CA. Me and my friends were together sitting next bench from first PUC to final BCom. He was damn clear that he will going to do MBA. Me and went together, we got seat in NITE. Okay, both of us got. He never made a decision to come into CA, but somewhere CA landed in my mind. I don't know how it came. I wanted to teach because my father is a professor. So I wanted to do MCom also. College life was golden life for me. I wanted to get back to that. So I was confused. Then somebody later said that when you're confused, no, either you toss a coin. Means you give it to God. If you are sure, my friend was sure, he didn't put that chit. He wanted to do MBA, MBA only, finish. But for me, 3 options were there. And I am okay with all. It's not that I was not okay with one. I am okay with anything. So 3 chits were prepared, kept in front of we have got one temple there. My father picked the chit. CA came, no second thought about others. I didn't look back also. Okay, irrespective of whatever that's where God has shown. And I don't know where I will land up. If I had done MBA, where I would have landed up. Whether I would have been alive or not, God knows, no? It could have taken me somewhere. My direction could have been somewhere, and what is waiting there, who knows? See, this direction God gave. Where I'm going to land up, who knows? This is an opportunity. We are sitting and talking to each other, which would not have been possible otherwise. Followed, no? See, my point to you again, see, either chance or choice. If you reflect yourself, you will also come to know why you are sitting here right now. Maybe somebody might have told you, somebody might have pushed you, you might have chosen it. Doesn't matter, Baba. At some point of time, you have to give it a stop. Like, complete this. This is my suggestion to you. Then a new, beautiful life is going to open up in front of you. Because you are persevering. No, see, this journey is not at this point of time. It has taken a long time, long journey of starting from first year PUC. Because you cannot change your direction now. You cannot become heart surgeon at this point of time. If you want, you can become later. Follow, that is another journey there. But whatever journey you started, my wish, give it a stop, then open up your mind. Then see the possibilities, how it is going to go. Follow, no? And for this, again I'll repeat, enjoy what you do. Anyhow, we'll start. Now, so many things are there, Baba. Previously, I used to talk all this thing. Now, I'm focused more on the contents. Anyhow, let me talk to you separately, all of you. Okay, because I want to stop teaching and start talking now. Because I realized, more importantly, more than I speak here, it's more important that you should think. Correct, no? You should sit and solve. Okay, so take out question number 43. See, we were discussing about the partial loss of control. AT Limited purchased 100% subsidiary for 50 lakh rupees on 31st March 2011 when the fair value of BT Limited whose net assets were 40 lakhs. So you purchased 100%. At that time fair value was net 40 lakhs. What is the goodwill? 10 lakhs is the goodwill. See, instantly by looking at it, we should be able to tell, yeah, they only gave me here. Now, AT sold 60% of the investment on 31st March 2003 after 2 years for 67.5. This is my sale consideration. You sold 60% means you must have lost the control. Then you retained 40% having significant influence. Then you not tell all these things. You just tell one word, 60% was sold. All these things I have understood. Only this should give me this information. Look for information to make it things complete for your understanding. And at the date of disposal, the carrying value of the net assets, excluding goodwill, is 80 lakhs. Now where? Net value in BT Limited in the consolidated balance sheets. And they are not telling exclusively, but when they said excluding goodwill, this is my assumption that this must be in the consolidated balance sheet they are talking about. Why? Because your consolidated balances versus the net assets of the BT book value may be different. What I need to de-recognize is the book value. What I need to de-recognize is the book value plus fair value adjustments starting from the beginning. If it is settled, it would have hit P&L account. Not settled, you would have added to the fair value adjustment. Assume that the fair value of the investment retained is proportionate to the fair value of 60% sold. Maybe probably they will not give you this in the exam. How do you calculate the fair value of the investment retained now? Retained. And this is what they say. Fair value of the investment retained is proportionate to the fair value of the investment sold. How do you calculate if this is not given? $67.5. Now tell me, no? Okay. Into 40 is how much? 40%. Did you get this 45 lakhs? Yes, followed, no? Now what is the Ind AS 27 applicable anymore? Is applicable anymore? Yes, applicable. See, that's why student, as subject a chapter may be very small. Should I leave that? No. Why? Not on a standalone basis, not even a single question has been asked. But if you have to understand this question or some other questions, what exactly, because suddenly they may say how it is presented in SFS also. Suddenly they may change it. For this, to understand this question, to answer this question, I should know that chapter. That's why at final level, none of the chapters you should leave. Why? Because they are interconnected. They may be connected with other subjects. Not to forget about chapters. Just know it on a standalone basis. Now what they asked me, calculate the gain or loss on the sale of proportion of BT. It is, they told no, separate and CFS. Or compute the gain and suggest, see, alternatively this question they may ask you in the examination, compute the gain or loss, which needs the working notes, how it will be presented or disclosed. Now, disclosed means you need to certain presentation and disclosure has to be done. Okay, that is what new thing we are going to learn here. Okay, so let us start with the separate financial statement. Now tell me, in separate financial statement, what is the value of the investment? They said at cost. Supposed to be at cost or can be at something other also. So write first assumed investment at cost as per Ind AS 27. Yeah, if it, that's what we are assuming, that it is at cost, so that whatever values they are showing, that value is continuing. Other somewhere they might have given the fair value also. Fair value also doesn't matter, okay. But if they have given FVOCI option, then the recycling we should have passed one recycling in. Otherwise, for FVTPL doesn't matter. You should look for the fair value. Or possibly they may say no, it is shown at a fair value. If it is shown at a fair value, what is the value of the investment, what you have sold? Okay, if they would have told that as per 109 they valued at fair value in F standalone, and its value is, not its value, it is classified at FVTPL. If that is the case, what is my gain or loss? 0. How? If that is the case, on 31st March, at what value you valued? 67.5, no? You invested 50 lakhs. Okay? On 31st March 2013, did you revalue it? At what value? So what is the gain or loss? On sale? On sale or gain, nothing. You will have a gain or loss only on the restatement portion, not on that. Followed, no? How it makes a difference now? So that's why, since information is very silent, we will assume it to be less. Gain or loss will go to P&L. So working note 1. So what is my journal entry? If at all I have to pass the journal entry, what is my journal entry? On the date of sales in the SFS, bank account debit, no, say sale proceeds, which is bank account debit. How much? 67 lakh 50. 2 minus book value of investment. Followed, no, it's a journal entry. We'll present in a form of a working. How much is my journal book value? 50 lakhs. Complete? Should I also write what you suggest me? Go on, no? 1 marks or 2 marks. Did you sell 100%? Then book value, when you sell 60%, will you eliminate 100% of the book value of the investment? You should take only 60%, no? Because you retain, no? Balance, is it not going to come in your SFS? So if you give credit of 50 lakhs, then your entire investment is wiped off. So, okay, first theory is clear now. And you say that my gain on the disposal is 37.5. See, small mistakes. One here, one there, another there, the fourth one somewhere else. That we should try to minimize. Again, one more, my observation in life. Success or failure doesn't happen because of one reason. Both. It has got multiple reasons, multiple factors. Examination also, both play a lot, like lot many things happen because of which success or failure is going to happen. Followed, no? So we have to try to avoid all these small mistakes. You see how much it is going to contribute to you. Chalo, we'll move on to the CFS. First write 80 lost control. Because they said, how do you account it? We have to explain that. If they simply say calculate, we will not explain all these things. Due to 60% sale. In CFS, 1, de-recognize net asset and goodwill. Recognize fair value of investment retained, gain or loss to P&L. So we'll explain that. Look, we have lost the control, so you have to apply the loss of control accounting. There is no OCI items for recycling here. This at a CFS level, you might have had certain OCI items belonging to the subsidiary. Your OCI items will continue. If you have taken your share of OCI from the subsidiary, on derecognition, you will write one more line, even recycle the OCI items. Not there. So you will just derecognize the net assets, recognize investment and gain or loss. Sorry, depends upon what item it is. If it is a revaluation surplus, you will take to retained earnings. If it is your forex, you will take to P&L account. Next, we need to calculate working note 2, calculation of gain or loss. What is my journal entry? If at all I have to pass the journal entry, what is my journal entry? On the sale, at a CFS level, what entry I should pass? Journal entry I need to pass at CFS level. When I sell and lose the control, should I not pass any journal entry? What journal entry it is? Simple thing. Investment is not there only, not to tell to investment. It is there only in SFS. In CFS, should I not pass any entry? Tell me the easiest one. Bank account debit. So, purchase consideration received. NCI account debit, because NCI if it is there. That's why I'll write plus NCI. Investments comes in 40%. Investment account debit. That's why I say fair value of 40% investment. 2 or minus net assets at book value. Goodwill, because net asset doesn't include goodwill. Goodwill is a separate item, only comes in the CFS. This net asset at book value where? Which book value? Not on the standalone. It is a standalone book value plus the fair value adjustments. It will come. It 100%. But when you consolidated, you had 100% investment in the SFS. It came in CFS also, because you pay to parents' balance sheet as it is. No, when you have the taken the net assets of the subsidiary, did you not credit investment there? You credited investment. So investment went off now. Net assets came, and this time net assets will go, and as per Ind AS 28, investment is going to come. Going forward, you add your share of profit like this. Perfect, no? Full cycle understood, right? Feels good, no? And then see, students, who is going to stop you or who is going to confuse you? Our mind is very beautiful thing, very powerful thing. It just needs clarity. So NCA is not there. What is the fair value of the investment retained? What is my 40% of the fair value investment retained? 40 lakhs. If they don't give me, we know how to calculate it. 45 lakhs. If they don't give me, we know how to calculate. Yes. Minus net assets derecognized. How much, Vishnupriya? How much is my book value of net assets derecognized in CFS of subsidiary? In CFS, we'll have total value. In that, some portion will be coming from the subsidiary. How much? 80 lakhs. Goodwill? How much is my goodwill? Does it 80 includes goodwill? No. How much is goodwill? Did it got impaired? No. Possible? No. They will add one more chili or masala to it. Goodwill got impaired, measurement period adjustment happened, then the goodwill balance will come down here. Other leg would have been sitting in the other equity there. So 90 lakhs. So total you made a gain or loss on disposal of the subsidiary 22.5. This question is a little different in the perspective of disclosures. Are you done? So you understood the logic, no? Why we are adding, what values we are taking. See, plus minus comes from debit credit. These values comes from what your standards will tell you. Measurement principle, recognition principle. They will tell you, take it at fair value, remeasure at a cost, recycle it this value, this difference you take to P&L account. And this is my journal entry, which is P&L. Next, since there is a we need a working note number 3. They asked me disclosure, breakup of gain. You made a gain of how much? 22.5. Can you give me the breakup of it? How did you get this break 22.5? How on earth you got that gain? What went out of your balance sheet? 100% of the net assets. What did you get for that? 67 lakh 50. You made a loss, no? How did you get a gain then? Understood my question? See, what you got, cash 67.5. What went out is 90. It's the loss, right? You got less money than what you gave up. Then how on earth you got a profit here? See, what is the profit? Okay, if I go back here in the standalone financial statement, how did you calculate the gain or loss? Cash, you got this much. What you gave up is this. Difference is the P&L. Like this, here also, if I see what you got is cash this much, what you gave up is 90 lakhs. No? Then similarly, what did you do? Did you deduct 50 lakhs there? In the previous SFS gain or loss, how much minus you did? Proportionately 30 lakhs. So when you say 100% assets derecognized, it 60% only I should consider, no. So when I talking about a breakup, 22 lakhs 50,000 came from two sources, one from this, one from this. So write two columns, 60% sold, 40% retained. What is your sale price bar restatement? If you would have sold 100%, 22.5 would have been, there is no disclosure required as such. You will say that 100% is sold and 100% is coming from sale. But since you didn't sell 100%, you say 67 lakh 50,000 and 45 lakhs. Less. What is your proportionate book value of the net assets? 90 lakhs. Out of 90, how much is proportionately sold? 54 lakhs. How much is pertaining to retention? 36 lakhs. So you get a breakup of 13.5 and 9. Followed, no? So in the examination, if this question comes, highly probable, compute, give disclosure, presentation and all, this is as per the Ind AS 110, you need to give a disclosure of the breakup. So, thus, P&L of rupees 22,50,000 has two portions, right? This is a working note. Now you have to explain now. One, gain of rupees 13.5 on equity sold. Second, gain of rupees 9 lakhs on remeasurement. Simple, Baba. Just give one working, explain that and tell how it is getting accounted. So this is not an accounting, this is a disclosure part. So in your annual notes to accounts, when you say sale of you have disposed of one of the subsidiary, you will report some profit in your P&L account. But that profit has not come from 100% disposal. If 100% disposal, problem would not have been there. But two things are missing, mixed there. So you give the breakup, this is coming from the investments and this is coming from the remeasurements. Are you clear? So we'll move on to the next question. Question 44, 80 purchased 100% subsidiary when the fair value was 40, therefore goodwill was 10. Now they sold 90% of the investment at 85.5, leaving 10%. So this is no more associate now. In Ind AS 27 is also not applicable to you. Net assets were excluding goodwill 80. Now assume the fair value of the investment retained is 90. Calculate the gain or loss in separate and financial statement. Yes, here they simply asked you to calculate. So you need not explain theory there. Simply calculate SFS gain, calculate CFS gain and give the breakup. That's it. Theory and all not required. Do the three things. Yes, students. So please pause the video and do this. Yes, students. So we'll check the answers. So in your standalone statement, you will have a P&L of 40 lakhs 50,000. No theory here because simply they asked you to calculate. And in CFS level, you received 90% sale consideration, no NCI. Fair value of retention is 9.5. So total gain is 5 lakhs. So this 5 lakh requires a breakup, which is coming 4.5 is from the 90% sale and 10% from the retention. Have you understood perfectly? So you are ready for exam questions now? Okay, this gain, you can always give the disclosure telling that this gain is coming from 4.5 is what you prepared a working note. He'll give us an explanation. Yes, so let us take up examination question May 19. See how they may ask you in the examination. Yes, so please pause the video. And see 12 marks. Okay, so you don't have any doubt. So 80.5 and 9.5 is the purchase consideration. You just distribute proportionately. 90 lakhs came from 2, no? 80 plus 10. What you credit, you distribute to 2. Clear, no? Yes, so please pause the video, students. See, understand, this is actually AS 21 question. Where since May 19 it was accounting standards were there at that time. So I have modified it as per Ind AS thing. But you see what type of questions may come for your exam. See student, that's why this question, simple question, but came for 12 marks. That itself indicates it is a risky question, conceptual question. That's why they offer more. Procedural, they have not, they are giving this question for 5 marks for you. Now, they said 70% stake was taken. On that day, acquisition, assets and liabilities. So, net assets you can take 70% of this minus this gives you goodwill. They didn't give. In every question, they are feeding you with the goodwill. The net assets position of Sham and 31st March and 30th September, 78 lakhs and 1,10,000 respectively, increases from the profits. We know that. Now, on 110, Shiv Limited retained 30% and sold the balance for 50 lakhs. Okay, on this date, you have lost the control. Discuss the nature of relationship between two companies on the relevant dates. Which all dates? Yes, on 1/4/2016, what it was? Parent and subsidiary. And on this date, it became an associate. And this is first question, question number 1. Accounting adjustments that are result as a result of any change in the relationship. Was there any change in the relationship? Yes, on first 10. What accounting adjustments you will do? Now you will say that there is a loss of control, so that calculation P&L you have to calculate. Also calculate the profit arising on part of the sale of the investment, carrying value of the proportion unsold, goodwill, capital reserve that arisen on the change of the nature of the investment. So you need to calculate the profit arising on part of the sale of investment. That means working notes you need to prepare, which is necessary for this adjustment. Book value of the portion unsold. What is the book value? The fair value of the retained investment. And goodwill, capital reserve that arises on change in the nature of the investment. That means on the date of acquisition, what you did recognize, or whatever you did recognize, that should be calculated. First, Sham Limited became subsidiary on 1st April. So the relationship changed to estimate. Did you wrote in your answer? See, what I am looking is two things. This date subsidiary, this date associate. Is these 4 elements are there? Language is yours. You write in which language you want, but these 4 elements should be there. Okay, how many marks you think? I may assume 2, since mark is huge, I may assume 2 marks. One for telling, because there are 2 elements, no? So probably I may assume 2 marks for this. Now goodwill calculations, because to have this, what is that called, a letter to adjust, to pass the sale entry, at a CFS level I need a goodwill. Did you get a capital reserve of 14,05,600? They said no. You calculated the goodwill on the change. On the change means, Are Baba, where it is going to come from? It will come from the beginning, no? Have they told you? See, this is what they do. Every time they spoon fed you there with the goodwill number. Suddenly exam they didn't ask you. Chalo, what I asked you, not calculate goodwill at the time of acquisition. They asked you calculate the goodwill at the time of change. Are Baba, change comes from where? At the time of acquisition only, no? Is your working has this? Okay, how much mark you think? Maybe reasonably 2 marks I can assume. Did you not knew? No. You don't know how to calculate goodwill? Huh? Sorry? See, that's what you have to spend time. Huh? Now you understood the interpretation. They said very categorically and very clearly, right? Calculate the profit arising and calculate the goodwill bar capital reserve ulta. They give you hint also. Capital reserve may arise. But the only thing they said that arises on the change in the nature. This is a confusing statement in the examination. That's what, no. They are trying to test you. Just if I shake you, will you get shaken? No, you should have put your stand and told, sir, this sentence what you told, no, it is a wrong sentence, because on the date of change in the nature of investment, no goodwill is going to arise. Even though it arises, it is subsumed as per Ind AS 28. This is you should have told. But what happened? You got confused. Your stand should be goodwill is going to come only on the date of acquisition. That's it. But since they use the word calculate goodwill, you have to interpret that. Oh, maybe probably they are asking on this way. Look at the marks, Baba. Understood the trap? Yes, so we will move on to the calculation of gain or loss on sale. Sale consideration 50. NC, how did you value? Proportionate net asset. Fair value of the retained investment, did they tell you amount? If I go back to the question, did they tell me the fair value of the investment retained? No. Nice, no? On the Shiv Limited. Okay, they didn't tell you, but tell me now, is your investment is going to have any accounting entry in the books of the investee? Shiv invested in Shyam. Who will pass the entry? One among the two, no? Shiv only, obviously. So that's why you need to have that clarity on in whose books I am doing. Now, my only question to you is, have you got this number? What went wrong? Huh? But did you sell 100%? No. So this is going to come? No. Understood? This is going to come. And the bank account debit. SFS, they didn't ask you? Did they ask you SFS here? No, you can give. I'm okay with that. You can give more. But see, Baba, goodwill capital reserve, this comes at the CFS level, no? And they are talking about the 70% stake. You have to interpret it. See, understand, only in study material they will spoon feed you everything in your mouth. In examination, they will give you, this is an exam question, no? You see the previous question, how beautifully you solved? 100 out of 100. Just 180 limited. I told you to do it, no? Why? Because they create a pattern. This is what they do in the examination. Business combination, for this you should have got that capital reserve. Did you get the capital reserve? No. So then that means, again, one new learning for you. Goodwill is there. You de-recognize it by crediting. If capital reserve is there, you de-recognize it by debiting. That is, debit means you should be adding this. 2 net assets, 1 crore 10. The gain on disposal will be 24.13. Now, question is very silent on the disclosures. But since the mark is 12 and my working notice doesn't make up to that, so better I'll give the disclosure also. Can you give the breakup? How much? 24.13 is the total profit, no? How much came from where? Okay, anybody got this 24.13? Huh? Near. Near is not correct. Enough, no. That doesn't matter. That mistake happened where, which ultimately, if this is going to get affected, I don't know whether the step mark will be there inside this or for your separate working. As far as I believe, step marks are there for separate workings. Like for example, you calculated this. These numbers are wrong, but this working is correct, they will give you. But is part of this one number is correct, one number is wrong? I don't know. It's the risk we are taking. It doesn't matter. Because if this gone means I don't know. Okay. Now, if at all you have to give a breakup, now you are very clear about the question. Can you give me the breakup? Can you give me the breakup? Yes, online students. I don't know up to where you have reached. So what I want you to do it right now, give me the breakup of from where this 24.13 came. Yes, you can pause the video and do this. Students, I am going to tell. Ultimately, I want you to think. You think, no, what all the components made up of this 24.13? Generally, see, tell me, how do you get a gain on disposal? What we receive versus what we give up. What did you receive? 50 and NC also you gave up, no? So that's a net thing, okay, and you have got a fair value of the retained investment. And if you see on the day of acquisition, you already made certain gain, no? Which is realized now. Previously you made a bargain gain. It was sitting as a capital reserve, not available for distribution of dividend because it was unrealized, just like a revaluation. Today, by selling your investments, did you not realize that bargain gain? 100 rupees mobile you got at 80. But when that 100 rupees mobile is sold at 150, 70 is your gain, no, not 50 is the gain. Understood the logic? So when you talk about the breakup, there are three breakup to it. Capital reserve, 40% of the retention and 40% sales. So your retention, 40% of this which was unrealized gain then at the time of acquisition becomes fully realized gain. You received this much cash for the 40% sold. What is the proportionate book value? 44 lakhs. This much retention happened, this is the book value. NCI debit also you ignore, credit also you ignore, because that is not your asset. How can you say you have received it? Think about the logic, Baba. Simple. Where 30%? That is NCI, no 30. 30. It is not my asset also. And how you have valued NCI? Proportionate book value, no. Where NCI fair value? Did you not de-recognize the NCI proportionate to the book value? That is remeasured, no, 37.5. So 37.5 minus how much portion of the book value went off? 1 crore 10 into 30%. No, you show it separately. No, why you want to give the gain? It's not part of that, no. Okay, understood. Maybe. I understood. Okay, your doubt is distribute this also among two. Have you distributed it like that? Okay, maybe new learning for you. I say wants you to keep capital reserve separate. Because this is not gain on disposal. This was gain on acquisition date. This got just realized now. No, if you say I will allocate this 30% to the particular pertaining to this, you will be overvaluing this, no, more than its fair value today. Which is say more than fair value. How can you value it? No, anyhow, understood. Yeah, just go. If you at all this worst case, this question comes again, you know how to write this. Followed, no? But very nice question. So then you give the disclosure. Out of this much will represent the reversal of capital reserve, 5,76,000 for the portion sold and 5,00,000 for the remeasurement. Carrying value of the portion unsold is what you remeasure, no? Okay, you can give one separate line there. That carrying value of the unsold portion is 37.5 lakhs. Because in going forward, in your CFS, which value will appear? In CFS, because it's an associate, no, going forward. As Ind AS 28, investment in associate, which value will appear? 37.5. From here you start add share of profit, add share of profit. You're talking about standalone. We can do it, but they have not done at the suggested answer. That's what I'm telling. I don't know. Proportionately, you see, the question is very silent. You might have assumed at SFS also. Yes, you could have done at SFS level also this much, and this is my retained portion. Simple. Which one? Book value? Oh, sorry, CFS net assets they given. If you read the question, they said net assets of so and so dates are given. It is subsidiaries net asset, and they said that it is because of the increase in the profit. From that line only we understand that we are speaking about CFS, no? Otherwise, for a parent, if you are talking about SFS, why you are concerned with the net asset increase in the subsidiary? So, we kind of increase in the net assets. That is result of the profit. We are to my investment, like in case I am so like now there is increase in Yeah, because of profits. From when to when? Net asset position of 31st March 2017 to 30. That means that much portion, 6 months is the profit, that should be added, not 30%, 70%. Because it's a pre-acquisition, post-acquisition profit, no? Before you convert it into an associate. When you got converted into associate? 1/10/2017, right? See, you acquired on 1/4/2016. What was your book value on acquisition value? 21,22,400, 70%. From here, your journey started. You got a capital reserve. So they told you 31st March 2017, your net assets is 78.4. Is it relevant for me? Is it required for me? Why? Okay, why in this case it is required? Not required, no? Because what happened on 31st March 2017? You closed your books. On that day, you consolidated. Why it is relevant for me? Not required. Now from here to 30th September 2017, they said that this is my book value of the net assets. This is important for me. And they said from this to this is the profit earned by them. Okay, Baba, from this to this, it is my subsidiary. When I prepare a CFS on 30th September, I will take 70% my share of profit from the profits, so that I will do the consolidation. So for me, all these pieces of information are confusions, no? Distractions, right? What it has to take to my accounting or decisions here? The second part of the second line, net asset position changed from 78.4 to 1.1. Why did you use it anywhere else in the question? So you understand that yes, there was a net assets at the beginning of the year. 6 months there was increase in the net assets, so that is going to become my post acquisition profit of the subsidiary. On 110 it is going to change. That means this 30th September, what was the book value of the subsidiary? That is relevant for me. Why? Proportionately I will take it. But I will not continue with that. Why? Because I have to find out the fair value of the net assets. You're clear, no, students? Okay, since again we didn't discuss this, I thought it is done. Okay, let me go back to the question. First of all, let us go here. This particular portion of the question, they said you acquired when 1/4/2016. Your cost was 21/22/400. How did you show in SFS? At cost. In fact, are we supposed to discuss anything on SFS here? No, just forget it. We will not mix both. Now 31st March 2017, did you sell? No. On that day book value was 78.40. Is it relevant for you? No. If they asked you prepare consolidated balance sheet on 31st, then it was required for me to find out what is the book value and all. Now on 30th/9/2017, the book value was this much. Is it relevant? Yes, because there is one event happened. Subsidiary got converted into subsidiary, associate. Now they said that this difference between this and this was my profit for 6 months. That is understood. What I am supposed to do? I should take my share of profit. So this is represented by individual net assets of the subsidiary. So for me, these informations are not relevant. This information is not relevant. This information is not relevant. This is important. Why? Because this is what I am going to de-recognize now. Now, you retained 30% stake, which is revalued and sold the balance for 50. So, what is the value of 30% divided by 0.7 into 0.3? 50 lakhs divided by 0.4, sorry, 0.4 divided by 0.3. This is the fair value. Now, this is what I am going to continue in my balance sheet going forward as a book value. So, what about the profit which you earned from 1st October to 31st March 2018? I will just, whatever book value you got for this 30%, which is nothing but carrying value of the portion unsold, add share of profit, which is 30% of profit from 1st October to 31st March 2018. But all those things they didn't ask you, but so many informations they gave you there, which is totally unnecessary, which was not required for you. And SFS, they are silent. If they are talking about SFS, 21.22, you make an assumption it is shown at cost. You will give two breakup here, 40% breakup is sold, 30% retained, and going forward you continue to 30%. What that has to do with all these profits of the subsidiary, net assets of the subsidiary? It has nothing to do. Understood? If we understand in detail, that's what I showed. Good. I thought, okay, it is done, and so I went further. I didn't even read the question, we didn't even discuss the question. But if you see, there is so much depth in the question. Unnecessarily, they will give you some information which is totally not relevant. And question is also silent. So, alternately, some students might have done SFS level adjustments. Doesn't matter. You would have given, because looking at marks, no, as much as possible you give. But certain major things should come. You should never miss. At least this you should not miss. Goodwill you should not miss, because without goodwill you will not be able to pass the next entry. This you should not miss. At least for me, these three things are the crux or life of this particular question. Other things you do in SFS, you give this breakup which is very silent, give this note, that's, you do it later, leave some space, do it later. Now clear, India? Everything is correct, perfect? Good. Clear now? Now, Reliance Limited, another type of question, is also came in the examination. Has number of wholly owned subsidiaries, including Reliance Jio. So many subsidiaries are already there, and you are already preparing a CFS. Now, Reliance Limited consolidated financial statement and the group carrying amount of the Reliance Jio. What do you mean by this? If I ask you one, of whom? Subsidiary at which value? At a fair value, no Baba, because the day you prepare CFS, the CFS has got two elements. One is coming from the parent, another is coming from the subsidiary. If unless that is a common control combination, your parent's value will come at a book value, subsidiaries will at a fair value. So at any point of time, how do you prepare consolidation? Take the book value of the subsidiary in the closing balance sheet plus fair value adjustments which you did on day one. So when they said that group carrying amount of Reliance Jio, that means the closing balance of Reliance Jio on one particular date from their standalone balance sheet plus on the date of acquisition of Reliance Jio, whenever it happened, if at all fair value adjustments were done, that additional fair value after depreciation or whatever adjustment, today what is the status? That. So you have to keep a track of everything. Did you settle that vendor? Did you settle the debtor? Was there any settlement of the stock? Because fair value stock is not an intercompany. Intercompany subsequent. Their assets and liabilities, that is the, see in the spoon feeding. See here, that is amount included in the consolidated statement of the financial position in respect of Reliance Jio's assets and liability. Now, very good clarity is given in the study material question. Is there no? At 31st March 2012. But in the exam, they will not give you this type of clarity there. Now, consolidated balance sheet of parent and subsidiary and their groups carrying amount of the Reliance Industries is given. And if you see here, they said that goodwill 190, out of this 90 is coming from this particular subsidiary. And balance is coming from where? Other. You remember that ABCD? 4 subsidiaries. ABCD subsidiary. That is one example which is something very similar to it. But we didn't prepare a balance sheet there. So they have given you the share capital. Prepare the CFS after disposal on 31st March 2012 when they sold 90% of the share to independent party for 1,000 lakhs. So you sold 90% of how much you are holding? Wholly owned subsidiary. So you sold 90%. So what you are supposed to do now? You have to prepare CFS. For this, what you need? Goodwill, not goodwill. So if you are preparing CFS for the first time, you need goodwill entry. You need, if you are losing the control, because by sale of 90% you lost the control, you need that reversal of the goodwill entry, gain or loss on the disposal. So that working is required. So write working note 1. Calculation of gain or loss. Okay, you can write here, there is loss of control. There is loss of control. Okay, I will not write much theory here, because simply they asked to prepare CFS. Others you can write here some story that you have to de-recognize the goodwill and net assets, recognize the retained investment at fair value, recognize the gain or loss in the P&L account. Some story depending upon the marks and the question. Here just I will say simply there is a loss of control. Followed, no? Okay, first working note 1, calculation of gain or loss. So what do you start with? Of sale consideration or purchase consideration received. How much? 1000 rupees in 1000. Look at the balance sheet. Balance sheet is in rupees in thousands, and you see 1000 thousands. Is there any NCI? No. Did you retain fair value of retained investment? Is there any fair value of the retained investment? How much is the retained investment? 10% of what? Okay, 10% you have retained. What is the fair value of that? Then you will say, don't do it. You will tell 1000 divided by 0.9, don't do it. Write here 1280 into 10%. It is 128. 1 minute, just give me a minute. Yes, did you write here 1280 into 1? Now, what is this 1280? Okay, write less book value of net assets, which is 1190, and how much goodwill goes? 90. So 1280 is the book value of the net assets. So they have fair valued it, which is equal to the book value of the net assets. Assumption. Question is very silent. I will show you what they have done in the study material. See, in another question what they have done, they have found out the market value. Here they have told, look, what I retained is only 10%. I don't have any influence also. So I will not value, because when you talk about this 90% consideration received, it includes control premium, right? So maybe their assumption is I will, and this is my fair values only. Book value means nothing but a fair value. Proportionately I will recognize in my system. Okay. How it is 1190? Okay, let us go back to the balance sheet. Subsidiaries building is how much? 670 plus 20 plus 450 plus 500, or I can say 1730 minus 90 minus 450. How much it comes to? 1730 total assets minus 90 goodwill minus 450 liability, 1190. Have you understood? Net assets of the subsidiary. So my profit or loss on sale comes to 152. This is one journal entry. So what 152 is going to do now? It is going to reduce the retained earnings. So straight away we will start with the consolidated balance sheet. Okay, so do we need to pass the journal entry here? No, journal entry is there in our mind, right? Journal entry is there in our mind. So we will start preparing the consolidated. Okay, this is wrong assumption, I don't say. This is the assumption what they have taken. I don't say wrong assumption. How do I say wrong assumption? Maybe it is fair value. That's what. It is an assumption taken by the ICA material that they have evaluated this. So it is left to there. It is left to your assumption. Now prepares consolidated balance sheet of Reliance. You have to prepare with the notes to accounts. Huh? So I will have here rupees in thousands, note number. Okay, 1. I'll start with the non-current assets, PP. And we discussed, we'll write note number 1, but we'll prepare later. In bracket, I will write what is my CFS value. When we did consolidation, we added. Here I am going to minus 670. In this, because this 670 is part of this. Sorry? 10% no, because how do I account 10% now? It is as per 109, no. When you invest 10% in say MRPL, will you take 10% of the net assets? No. Even associate and joint venture also, that's the only difference now, because previously associate to always we used to recognize as investment. No? In your accounting standard, for associates we used to follow proportionate net asset. That means if something is a joint venture, you have invested 40% in that, you used to take 40% of your BP. Nothing, no. Now you have got only 2 accounting, either full consolidation or your influence consolidation. Ind AS 28. Now you have got goodwill under PP. How much is the goodwill? 190. You didn't add plus minus 90. They may add a twist also. They followed. Then here the chances of twist are very low. So you will say note number 2, 100. The first is 950. Do you have investments? Yes. Financial assets, investment, 10%. What is the value of that? 128. You can say working note number 1. Then you have got current assets. First item in the current assets is inventory. You take 70 of the consolidated minus 20 which got derecognized. Followed? So you got 50, note number 3. Then you move to financial assets, trade receivable, 850 minus 450, note number 4, 400. Followed? What comes next? Cash. How much is your consolidated cash? 1550. How much cash went out because of the derecognition of the subsidiary? 500 and 500. Is there any more entries related to cash? Plus 1000 you received cash. Note number 5. See, with this, no. See, this asset portion of this you addressed. Derecognition this addressed. This address, this address. Only liability is pending now. Followed? No, so this is nothing but a journal entry. Then I will show you in examination. See what you need to do. First you prepare this, prepare consolidation, finish. Leave space. Then if this Reliance Jio question comes to you, I will show you one working what the IC has done. This particular working what I have done in one step, they have given in pieces. This they have done working note number 1. Okay, book value of the net assets with this they have done working note number 2. This, that means one working they have split into 3 workings. That you do it later. I'll show you what they have done in the study material. But if at all I will do all those different breakup, no? You say, sir, this question is very lengthy. Arey Baba, it is simple. Just one working you do, straight away start with the balance sheet, write on the face of the balance sheet all the values. Then you start preparing the notes to accounts. You get a control over it. Followed, no? Yes, now I'll move to the equity share capital. Notes and all we will prepare later. I'll proceed. So, in equity share capital, equity and liability, equity share capital. What is your equity share capital? That is 800. That's not going to change. Note number, how much? 6. Other equity, note number 7. Can you tell me what is my other equity right now in the CFS? 2130. Is there any adjustment coming because of the workings? Loss minus 152. With this, and you add to the creditors, deduct it from the creditors. Yes, you incorporated that entry in the closing balance sheet. Balance sheet has to tally now. So you get 1978. NCA was there, you derecognized, or if it is there, it's not there here. Next comes liability, current liability, trade payable, 1350 minus 450. 450 is from the net assets of the subsidiary. Yes, done. You understood the balance sheet? You have taken no current liability. What is that? Where is 2000? $2930 is the total of equity share capital plus retained earnings. No. Add no 2130 plus 800. I don't know how it is come, but they will confuse you, Baba. I am telling you. You should be like a swan. What people say swan. You know what swan will do? If you mix milk and water, no, the swan is capable to drink only milk, it seems. At the end, it will leave the water, it seems. No, it can be hypothetical or whatever story it is. But they say that swan has got that ability. So if I give you a distracted, mixed question, you should be in a position to take what is relevant for you and understand this is distraction. And I'm showing you and I'm proving it every time. This is what they do. Is it only for one subject? No, if they do it for this, definitely they must be doing it for others also. You see, same pattern. Every single subject they do it. Where? Only final? No, this journey starts from the foundation. I've seen at the foundation. So when they don't leave the foundation students only. Final level also they do this, no? Simple. Is it difficult? Is concepts difficult? Concepts are simple, no? Don't you know? You know it. Then where is a challenge? The challenge is focus. Understand what they are doing, what is the rules of the game, what they are trying to do. Followed? Yes. Now you prepare the notes to accounts. You write the PP, goodwill, inventories, whatever you have done, no, you present it like this. Then you start with the trade receivables, cash and cash equivalent. Then you start with the other equity, where you have here only you have given share capital is 800. Alternatively, you could have given opening balance change during the year, closing balance. Then retained earnings, entire amount is opening balance plus loss of the subsidiary. Then the trade payables. Now I'll show you. See, this is what they have done in the study material. See, consolidated balance sheet and notes to accounts they have done. But if you see our investment, whatever this thing or that we have done one single working, right? See, they have broken it into like this. They said carrying value of the investment, maybe 1 mark they will give you for this, and if you don't prepare that separately. If you prepare total, they will give you only for 1 mark for the total, but the inside components they will not give you. But you can do it later. Cash in hand balance they have given you, which we have done notes to accounts. Okay, anyhow, we will fetch a mark from there. Gain or loss on disposal. See, this is the number what we got. But they got it like this, step workings. Retained earnings balance, we have done it from the notes to accounts. Perfect? Yes. So this is a 16 marks question. I think you should be doing it now. P private is a number of wholly owned subsidiary S limited. Consolidated financial statements are given on 31st March 2012. They have given you consolidated balance sheet. Goodwill is also there. Or I think it's the double number, no? 90 goodwill, 180 here. Equity share capital. Okay, this time they didn't add this and give the one single figure here. Dhanashree. Previously they confused, no, with this one number here. Now prepare the CFS when the P Limited group sold entire 100% of the party to some third party. Yes, you can, I think you can do this. Yes, so please pause the video and do this working. Just prepare the consolidated balance sheet, enough. No, any confusion? 100% is sold, that means it is no more my subsidiary. Previously 90% is sold, still also it is not a subsidiary. What is the difference between this and investment will not come there. Investment portion retained will not come. Maybe in the examination you will see one item called NCI also here. Then you should know it, what to do for the NCI. Followed, no? So we'll check the answers, students. So first you will write the story depending upon marks, whether there is a loss of control. So straight away we will go into the calculation where there is no NCI, there is no step like retention. Straight away say 3000, net assets derecognized is 2380, goodwill is 180, so 440 is the gain, which will be added to the retained earnings. So we'll straight away start with the balance sheet. In brackets, I think you must have written PP 1900, goodwill 200, no investment retained, inventory, trade receivable, and cash is going to increase. We'll give the breakup of this in notes to accounts later. Total assets is 8100. Equity share capital is 1600, other equity is 4700, liability also you are going to add and 1800. Simple, right? It's the opposite of your goodwill, 103. So fairly, very relatively less adjustments here. The only catch here is maybe that one working what we did, you may have to present in 2-3 workings. Please look into the study material once, compare it so that you get a better confidence. Then you prepare notes to accounts like this, PP, consolidated balance minus the individual value. So since already you have got the numbers, it's just an administrative job to present. Trade receivables, cash and cash balance. Other equity also you do this, gain on equity you will be going to add it. Trade payables 1800. Yes, so we'll move on to question number 48. MN was holding 80% of stake in UV Limited. Now MN is disposed entire stake in 2 different transactions. It didn't sell in one transaction. Now transaction number 1 they sold 25% for cash of 250,000. Now transaction number 2 they sold 55% for a cash of 550,000. Now both the transactions happened within a period of 1 month. Are Baba? Now comes the problem. Otherwise I don't have any problem. I would have said the first transaction is a sale of subsidiary without partial sale without loss of control. The second part I would have told loss of control. Now in accordance with the guidance given in 110, both the transactions to be accounted as a single transaction. You remember there were 4 indicators we discussed at the end. Is it having a commercial substance? Does it one transaction support another transaction? Are you trying to achieve one thing by using 2 things? Now the net assets of UV and the non-NCI on the date of both the transactions were 9 lakh and 1,80,000 respectively, assuming there is no earnings between these 2 periods. Good. That means whatever NCI was there, it was same balance and your net assets were also same. So since you have to account it as a one single transaction now, so you have to take net assets of only one particular date. If your analysis says literally you have lost the transaction, lost the control on day 1, then you should do loss of control accounting on day 1. Then this becomes purchase consideration receivable. That's what entry I'll pass. Cash account debit to net assets. No. Since I would be receiving 550,000 after 1 month, so I say cash account debit, debtor account debit to net assets. What if you lose the control here? Then loss of control accounting should happen here. But out of this 250,000 you received 1 month back. So it is like a capital advance received. Bank account debit to customer advance or capital advance. And later when you pass this entry, capital advance account debit, bank account debit to net assets. Suggest how the transaction should be accounted. Are you clear about this? Yes. Now calculation of the gain or loss on sale. First of all, what is your sale consideration? It is 2,50,000 plus 5,50,000. 8 lakhs. Did you retain anything? Now on which day you are doing this? We don't know. Question is very silent. Have they told you on transaction 1 have you lost, or on transaction 2 have you lost? Have they told? No, question is silent, no. Whichever it is, doesn't matter whether on transaction 1 or transaction 2, this is a calculation you are going to do on the day you have lost the control, which will give it as a note. Did you retain anything? No, because entirely you are treating as one. Otherwise, all this retention and all would have come there. Plus, is there any NCI which you need to de-recognize? Yes, 1,80,000. On both the days it was same. Why? Because the profits were not earned. If profit was earned during this middle 1 month period, then the NCI balance would have been more. Accounting would have been more little tricky for you. Now life is very simple. In examination they may give you in this 1 month period profit was earned. Are Baba. Nothing simple. It's simple. NCA is 1.8 plus that NCA portion of that profit for 1 month. Minus what is FENA? 9 lakh. If they say in 1 month profit was earned, 9 lakh plus that whatever 1 month profit in the examination, if they tell you. Otherwise, it is totally 9 lakhs. So you say, irrespective of on transaction 1 or transaction 2, whenever the company is going to lose the control, this is that accounting it is going to do. Loss of control accounting is going to happen on that day. That's why we will not treat it as both two independent transaction. If I would have taught it as an independent transaction, my profit on the first 25% sale I would have taken to other equity. But here, that profit also I will take to P&L account. Because standard doesn't permit me to take to P&L account if you have not lost the control. Subsequent changes. Understood, no? So write note. Clear, no? Vishnu Priya? Miss Vindhya? Note. If MN loses control on transaction 1, what if the transaction 1 only you have lost? 1, MN will stop consolidation on that day. Above gain is recorded in P&L on that day. That means whatever gain you got above, you would have, even though you are not sold full, you would have if you lost the control, then you would have recorded that gain in the P&L on 31st March only, and you would have stopped the consolidation from the next. Second, consideration of rupees 5,50,000, it is yet to receive, no, is shown as receivable. Instead of cash account debit, you say cash account debit, receivable account debit to net assets. Are you clear? So this is the accounting if the control is lost on day 1. Second, if control lost on transaction 2, you will repeat the same thing. Stop consolidation from that day. That means you will prepare consolidation up to say 30th April. And recognize the gain in the next year only on 30th April. Second, consideration of rupees 2,50,000 what you received is shown as advance. So before you lost the control, whatever money you received 2,50,000, you would have shown as an advance on 31st of March. But you don't pass any sale entry, even though you have sold 25%. Because of this, there is no incentive for the people to get into this type of transactions. Clear? Yes. Next question. A Limited ceased to be an investment entity from 1st April, on which date it was holding 80% of B Limited. Now, what is the advantage of you being an investment entity? No consolidation. You have got an exemption from consolidation. So, you are not doing consolidation. Instead, in your standalone balance sheet, you are showing investment at FETPL. That's the reason. That's why you got that exemption. Now, the carrying value of the investment in B Limited, which was measured, see, should they tell you that it should have been measured at FETPL in SFS? We have understood by reading this sentence that okay, these many things must have happened. It's 4 lakh. When you invested, God knows. But on 1st April, you lost that status. The moment you lose the status, you have to prepare CFS now. The fair value of the NCI on the date of change in the status is 1 lakh. That means like now the goodwill entry has to happen. The value of the subsidiaries identifiable net assets are 4,50,000. Now determine the value of the goodwill and pass the journal entry on the change in the status of the investment entity, assuming that NCI is measured at a fair value. If at all they say NCI is measured at a fair value of net assets, into 20% you need to do. But if they given the fair value, you do it. In fact, this is not loss of control. This is consolidation, but not that way. It is one odd end question. That's why I have given at the end. It is like change in the status. So when you change in the status from an non-investment entity to non-investment entity, yes. How do you calculate goodwill? Did you receive sale consideration, purchase consideration? Sorry, did you pay anything? No. But you need to say deemed consideration. What is your deemed consideration? What you gave up? Fair value of the assets. So fair value of investment, which is 4 lakh. Which also you could have said step acquisition. But we will not give that breakup because it was one investment only. It's not even step acquisition. So this is your deemed purchase consideration because you have given up 4 lakh minus, sorry, add, do you have NCI? Yes, this is 20% and NCI is 20%. This is 80%. How much? 1 lakh at a fair value method. So total you have got 5 lakhs minus FVNA, have they told you? Yes, as per 103, it is 4,50,000. So you record a goodwill of 50,000. What journal entry you are going to pass? Net asset account debit, goodwill account debit, to investment in B, to NCI. This is your CFS entry. So going forward, you are going to prepare the consolidated balance sheet from 1st of April. So on 1st of April, you are going to pass this particular journal entry. Previous one, it's the same journal entry. Are you clear, students? Yeah, very low probability, but at least you know. No, don't get surprised if they say change in the investment. You know that what exactly to do. Next question. CD purchased 100% of the subsidiary, and on 31st March, when the fair value of the net assets is 1,60,000, goodwill was 4 lakh, CD became an investment entity. Now what happens? Exemption, that means loss of control. So when the fair value was 25 lakhs, at the date of change, the carrying amount excluding goodwill is so many. Carrying value, book value of the carrying value, consolidate. But if you slowly understand and imagine and think, you understand what. Now calculate the gain or loss in respect of investment on the date of change in the investment status. Can you do this? Friends, can you please pause the video and do? This is the reversal of what we have done previously. And both the things we have done it. Loss of control also we have done.